The expression on my face, disappointed. We've got some things to talk about, folks. I'd like to welcome you to Be the Boss of Your Money. It's my live stream. I call it Be the Boss of Your Money because the whole concept behind it is for you to be the boss of your money, not your money, to become the boss of you. We talk about business, investing, personal finance, credit scores, college funding, retirement planning, IRA distributions, Social Security claiming strategies. We talk about so many things here. But lately, the economy, the stock market, the pandemic, really everything has gone by the wayside because of the pandemic. Don't give up on your financial goals. Keep doing the things you're supposed to be doing. I realize for a lot of you, there's an interruption in life. Well, really for all of us. But some of you, it's more than just an interruption. It's a financial disaster. My heart goes out to you. It really does. This is horrendous. The news coming out of California was like just a punch in the stomach for some friends of mine. And we're going to get into this. Look, what can I tell you? I don't always have the happiest message in the world every day, but let's talk about what we can do to make the most of the situation. You're watching Be the Boss of Your Money. I'm Mitch Goldberg. We're going to roll the intro, and I'm going to talk about everything we need to talk about while I do the update. I'm going to make this nice and quick. Stick around. You don't want to miss this. And we're back. Thank you so much for joining me. I'm Mitch Goldberg. I'm a financial advisor with 30 plus years of experience working with all kinds of situations and client matters. So after a while, you see enough, you're really able to give people advice and help people out. The background behind me, I was looking for something that is technology centered. So I found this background behind me. If you want to know where I got it from, I actually got it from Canva Pro. And so it's kind of like a techie digital background because the theme of the day is how the NASDAQ, how tech stocks gave up the ghost so hard today in such a blasé, disappointing fashion after the way the stock market rallied in the morning. It was really pathetic. So my name is Mitch. What's yours? Hey, I'd love to know you're out there. So words of encouragement are always appreciated. If you have any questions, ask away in the comments. Hit me up. I'll see the comments. I'd love to answer your questions. It's fun. That to me is the best part. If you watch this in the replay, I'd like to welcome you as well. Just hit me up with your questions just the same. So what we're going to do is this. If you're a viewer of the show, you know that I always start with the summary of the day, not just like a market wrap up. Anyone can give you that. What I do is I add a lot of perspective and knowledge into the market wrap up. Okay. So we've got a couple of things to talk about, but I want to just hammer this home. We were, believe it or not, in the S&P 500, ever so slight, we were up positive territory for the year. It lasted about a second. If you blinked, if you took a sip of your Dunkin' iced coffee, you missed it. And I just dripped water from the condensation on the cup all over my lap. Okay. So let's talk about that. It was really disappointing. I've been talking about I don't want to be like I've been talking about. I've been speaking with you. I want to relax a little bit. Okay. I've been speaking with you about how I think tech stocks have really rallied. I've used the word parabolic. Tech stocks have gone parabolic. Too much, too high, too fast. Time to take profits. That was the title of one of my live streams. One of the themes of my live streams last week. And I know it's tough to say that, or it's tough to hear it, or it's tough for me to sound like I know what I'm talking about when the market keeps going up. But after this morning, Tesla rallied 16% out of the gate. How does a company as big as Tesla jump 16% this morning? What changed between this past Friday and today? What happened over the weekend that Tesla was suddenly worth 16% more? The market cap high for Tesla, which it became the 10th biggest company on the stock market with a $321 billion market cap, ended the day with a $277 billion market cap. So it's a $43 billion, $44 billion swing in value. $44 billion. Listen, the numbers are staggering. The stock on June 29th, I've got some notes here. On June 29th, Tesla hit $1,000 for the first time. 2 weeks later, it hit almost 1,800. What did Tesla do to practically double in 2 weeks? Nothing. Absolutely nothing. It's just that investors got carried away, throwing money at what's working, because if something's working, then the company must be doing well. Not necessarily does a stock reflect the health of a company. Yes, sure, an up stock reflects a healthy company, but when a stock goes parabolic, I want to show you what I mean. Because I am so in the camp that what's happening now reminds me of the year 2000. Let's see if I can make this a little bigger without taking an hour. Come on. So you see that chart? I don't know who that little guy is in the corner there, but I guess an analyst who covers it. There we go. Boom. You see this, how this goes up parabolic like this? This is just about a little over 2 weeks of time. That is a parabolic chart. And that has happened with Amazon, with I believe the NASDAQ 100, especially semiconductors as a subgroup of tech, has really gone has overdone it. It's overcooked. Time for a rest. Now, that's my opinion. Now, some people may act on my opinion, so it's not just enough for me to say that's my opinion, because unlike most YouTubers out there who say, oh, it's just my opinion, that's not good enough. You are not allowed to just say what you want and say, that's my opinion. I'm sorry, other YouTubers, if you were in the securities industry, that wouldn't be good enough. You really have to go through the process of showing some experience, some aptitude that you've been doing this for a long time. And I went through the tech wreck, started in the industry in 1990, and I've seen a lot. I mean, I started in a recession. I'm in a recession now. I don't know, maybe it's me. Okay. So Amazon was up 65% on the year when the week ended. Actually, it was up 70% year to date last week. So, the way to play this, what I've been saying is, if you don't want to make your decision on whether or not you should sell any stock just on price, because price is not always truth, and just because a stock goes up a lot, they could go up a lot more, or they could go down a lot more. You really have to make the decision based on your own personal finance. For example, if a stock or a sector becomes too big a part of your portfolio and you need to scale it back, rebalance, then you need to do that. If something's too big in your portfolio, if a stock or whatever, if any holding, an index fund, if it's too big in your portfolio and it goes down, it would have a amplified negative effect on you. So therefore, if you can't take that, that's what you base your decision on. It's called personal finance. We put the personal back into personal finance. Make personal finance personal again. That's what I say. Let's take a look at a couple more charts, okay? California, well, this is not a chart. This is just news. California to close indoor restaurants, movie theaters, and bars statewide. I want to emphasize that, statewide. It's not just in one county or another. It's a statewide closure. I expect more states to go this route because it's too hard. You can't just come out and say everything's okay. The pandemic is under control. Don't worry about it. We're doing fine. when you've got rapidly rising cases, filled up ICUs, things are pretty bad, and it's not just from oh my goodness, if one more person says it's because of more testing, it's a higher percentage of people who are being tested are testing positive. And it's like, if you say it's all from testing, it's like saying, you mean if you didn't test, there wouldn't be more people with COVID? These people have COVID whether or not you test them. Okay, so it's not just going up because of testing. Is that okay to say? Okay, I don't want to hurt anyone's feelings. Okay, so but this is really big news, and then we just want to take a quick look at the FANG stocks. This is Facebook, Amazon, Apple, Netflix, the G for Google. I know it's called Alphabet now, but we still use the symbol GOOGL, and M for Microsoft. And I've been talking about the FANG stocks now for a hell of a long time. By the way, I see some people out there. I know there are some comments out there. And I will answer all of them. I see David is out there. David Pestricello. Did I get it right? Come on. Tell me if I got it right? I want to know. I'm usually pretty good with these names. Okay. The answer is David is asking, I guess it's like a credibility thing. I don't know. Do you have a position in Tesla? No. I don't have any Tesla. I don't have any clients in Tesla. I don't have it. I have a lot of the other hot, NASDAQ stocks, the FANG stocks. And I said like 2 weeks ago, about 2 weeks ago, I said, I have these up to my eyeballs. I mean, can't buy them anymore. If anything, I want to scale back on them. I'm not, you can't keep buying the same thing. Can't keep pushing your chips to the middle, as Dave Portnoy from Barstool Sports says. So, David, we're kind of new connections. I really appreciate you being here. Thank you very much. Okay. They're not in a recession. Market is at all-time highs. Okay. So that's a whole other story. I wrote a whole post about that, David, this Friday. And I've been talking about this for months, the whole, quarantine and everything, but the stock market is reflecting large cap stocks. It's not necessarily reflecting the economy. So, GDP is down. Corporate profits are expected to come out lower by 44% this, for the second quarter. It's pretty gosh darn dang recessionary to me. The fact that the S&P is up is because a handful of stocks, large stocks that have really benefited from this environment, the big screen stocks like Netflix, Facebook, Apple, Amazon, they've carried the market. And that's what I'm going over here, because these 6 stocks make up almost 30% of the stock market. I've been saying this for a long time. So just want to catch up here and say to everyone, I call these companies the black hole because they suck everything into it. They either suck everything up or they suck everything down. So when Facebook is down, Apple is down, Amazon down almost $100. Listen, Amazon was up like $100 last Friday. After hitting 3,000, it went right to 3,200, over 3,200. I mean, what did they do in a few days that made them worth 7.5% more? Nothing. It's called momentum. Netflix down 4%, Alphabet down over almost 2%, Microsoft down 3%. When these stocks go down, it's really hard for the S&P to put up a fight against these big stocks. And if it's these stocks that go down, then you have to take a look at the Salesforce.com, the NVIDIAs, the Broadcoms of the world, and you start going on down the line, and you realize that tech and communications are combined are the biggest part of the market. So that's what you get. Okay, so let's take a look at another watch list. Oh, what is that? Okay, yes, here are my sector ETFs. Healthcare was up today, indication of a slowing economy, but financials are up today. Hardly, but nonetheless, JP Morgan had a good day. So financials are up. That's important that financials are up. One of the themes that I've been talking about here is that if we come out with a coronavirus vaccine, for example, because the last couple of days, that's what's been moving the market up, and it's been moving all kinds. Let me just stop the screen share for a second. So news. I see your other questions. I'll get to those too. News of a vaccine or a really effective COVID treatment helps soothe worries about the economy, because that means people will feel comfortable traveling, going in airplanes, going to restaurants. congregating, going to shows and all those fun things, the mall and just not being afraid. So, and my concern was if we come out with something like a vaccine or something close to it, a big help for the virus, then the concern, you got to go, man. Okay, so just real quick, I'm going to just put your questions up here. What's your portfolio? David, just so you know, I don't actually speak about exactly what's in my portfolio word for word on the live stream, but you are welcome to reach out to me directly and I will tell you. Okay. NASDAQ, not large cap stocks. Well, yeah, but I mean, the biggest stocks are in the S&P and the NASDAQ. So they trade more in lockstep than the S&P and the Dow. Keep up the good work. Thank you very much. Yes, we are due for a correction and still all the best. David, thank you very much. I like is that a LinkedIn hat you're wearing? Okay. So let's get back to everybody here. Folks, I love it, by the way. If you're watching this and you have a question, something, I'd love to hear from you. I really enjoy that aspect of the live stream. I would rather do that all day long than talk about other stuff. All right. So, so the question is, if we come out with a vaccine or a very good treatment for COVID, what I've been saying is you would see these big stocks that had the big run up that led the market in its recovery from the March low through now. They would pull back because you take away the impetus from holding on to these work from home, stay at home stocks. And the money would shift into maybe the cyclical industrial companies, the Caterpillars, the Deeres, the airlines, the cruise lines, the consumer discretionary stocks, financials. But what you had for the last few days is new money coming into the market because everything was going up. But today it looked like whatever new money was coming into the market stopped. There are trillions of dollars in money markets, but now the money that's fueling industrials and other type stocks, industrials were up today, looks like it's just coming out of the tech stocks. And as you can see, techs were the worst performing sector, communications. By the communications, you might be thinking of like AT&T and Verizon. They're actually those are small components of the XLC, the S&P communication sector. Facebook and Alphabet, and make up about half of that sector. And Netflix makes a pretty big slug of it too. So if you add those three up, it's more than 50%. All right. So mixed bag today, and let's take a look at Tesla. Tesla up 16%. We kind of went over that. So, oh yeah, I'm not sharing my screen with you guys anymore. It doesn't matter. You could hear me. So that's what I see happening is people have gotten carried away. Some stocks are up too much. I am in the camp that if the large FANG and their fellow cohort can't hold up, I'd be worried about the rest of the market. We are getting earnings now. We're going to start with we had Pepsi today that were better than expected, and we're going to get all the financials and all that. So we could wait a few days, see what earnings are like, see what they're like next week. But my sense, the way the market sprinted ahead today, putting the NASDAQ in record territory, the NASDAQ 100 in territory, getting the S&P back up to flat, and then everything just gave it all back at the end of the day. And tech stocks in particular got really hit hard. That to me, it looks very toppy when that happens. Now, I'm going to just tell you in technical terms, when the S&P 500, I'm going to use that as the index. That's the one that everybody follows. Hey, James, how are you? It's good to see you, buddy. Thank you very much for stopping by. Thank you. I know it's you're probably on your way home because James is watching from Melbourne, Australia. James is a principal and partner at a boutique financial planning and investment management shop in Melbourne, Australia. And we've spoken before. Good guy. That's what I love about LinkedIn. I'm making some friends with the really smart people and kind people. So, but if the chart goes up to a certain level and then bounces off it down, hits it and goes down, that level becomes a resistance level. So now you want to see the S&P chart go above that level. And today it hit it and retreated again from that level. So if we retreat much further than the way we did today and we can't get through that level, the longer it takes to get through that level, the stronger that, or the harder it is to go through that resistance level. So today, technically speaking, it looks like a pretty, not just a weak day in the market, but just a real disappointing, horrible close for the day, which I think will have, uh, greater ramifications than just today. I think it'll be longer lasting. So that's my story. I'm sticking with it. I don't like how the tech stocks performed. I think they've been parabolic, too high, too fast. And the pullback, I think, is going to hurt. And when you pull back, you have a lot of competition. You have competition from fund managers, hedge funds, and from your fellow investors who are not in these stocks because they're committed to them, but because they just bought them for momentum. They're up a lot. So people want to hit the exits pretty hard. We'll see if it's like a real hard correction or if it's just a couple of bad days. But as well as these companies are, from Tesla and Amazon, and as much as we think their revenues could go up over the next few years, a lot of that good news is factored in already. So you could actually be right on the fundamentals of these great companies and still get it wrong on the price of the stock. And since we're investors, getting it right on the price of the stock is really what puts money in our pockets. Thank you so much for watching. I'll be here tomorrow, and let's look to see if we have any follow through. Thank you.